We are back to close out a wild February in the financial markets. We're going to be discussing inflation, housing, crypto, all sorts of fun stuff, and much more today on Money Never Sleeps. Welcome back, everybody. Appreciate you for joining us. As we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research. Kev, I'm still under the weather. It feels like it's that time of the winter where I'm never going to be healthy again. This kid of mine just keeps getting fucking bug after bug and making me sick. But you know what? The show goes on. The world keeps spinning. The markets keep being the markets. How are you doing today? How are you feeling about the financial markets as we close out an extended February?
I'm doing great, man. I think I don't think we're wrong on the macro. Let's put it that way. A lot of data coming in, a lot of things that are kind of lining up with what we're saying. I'm starting to see articles pretty much being like an echo chamber of what everything we've said on the show for the past 3 months. So it's good to see other people finally starting to see maybe the light. But I think we're doing pretty good. We saw a little bit of a pullback in Bitcoin. We're seeing the equities kind of pull up a little bit here at the close, kind of. And again, it's the monthly close, so things are going to be a little bit different today than they would be if we were, say, in the middle of February, in the middle of March, right? So I'm feeling pretty good going into March. If you made money in February, God bless you, man. There's a lot of gains to be made. The question is, will everyone be able to keep them? We'll find out. And
we'll find out.
Sorry, so you cough.
No, all good, man. Let's kind of go through some of the data that came in this morning. We had the January PCE report, also looking at income there. Personal income up 1% month over month. So that's, good for the consumer. The average Joe making a little bit more money. That's nice. Disposable income was flat. We saw personal consumption expenditure. So the Fed's preferred inflation gauge rose 0.2%, which was right at expectation. So it's below the previous month. This whole chained dollars thing on the report is still really stupid, in my opinion. We saw the core number up 0.4%. So that is a pretty big increase. We haven't seen one that big since the middle of last year. So not the greatest. The year over year numbers came in at 2.4 on the headline, so down from the previous month. 2.8 on the core, also slightly down. The market is taking this as bullish news because, of course, they are. If we looked at some housing data, we will also see that the housing market is in a bit of a shit spot right now, and no one's really talking about it. So pending home sales, 8.3% increase last month. Expectation was a 1.5% increase this month. So already a pretty big pull down from that. Came in at negative 5%. Or minus 4.9 to be more exact. The housing market is getting absolutely shellacked right now. Prices are down across the board. Supply, we went from this, supply demand imbalance back in, 2020, 2021, where there weren't enough houses, right? Because of, logistics and I'm blanking on what fucking word I'm trying to say here.
Good, man. I think it was, what do you call it?
Supply chain. There's supply chain imbalance. So there wasn't, back when lumber was like $1 million for a tree. And now that imbalance has completely shifted to where there's plenty of supply out there, especially with new homes, but no one wants to fucking buy because guess what? Rates are goddamn bananas. So we see the housing market prices continuing to go down. One of the worst decreases year over year in recorded history. So that's not ideal. Meanwhile, yes, people are making a little bit more money. Also, I think issues with people's credit. One stat I would love to see would be the average credit score, month over month, year over year, because that would give us a really good indication of are people actually paying off their debts, what is going on there. But unfortunately, I'm not privy to that information. But anyway, so we have that going on: inflation, housing. Which of those things is moving the needle for you more?
Inflation is a very tricky topic here because I think what people think it means isn't what it actually means, right? We continue to see the price of goods be problematic for consumers. Well, they'll just spend less. that's something that we have to keep in mind. And kind of the wages problem too. I put out on Twitter that, we're starting to see wages kind of pick up here, and we're seeing the minimum wage kind of pick up in other places. But at the same time, we're also seeing hours worked decrease. So I put out the example that, $15 an hour for 4 hours is the same as $12 an hour for 5 hours, right? So you might be getting that $3 bump, but at the same time, it's like, well, you're not, the hours will come down because we have to meet demand. The supply demand has to meet at some point. If there's no demand coming in, they're going to cut the hours back. So people might be making more now, but it's not something that's going to be sustainable if we continue to see contractions in the economy, especially around demand, right? So the Chicago PMI data came back expected to be 48, but it came in at 44. It's a huge contraction there for their PMI. It's not the only district that's had really big contractions recently. I know Richmond also had a big one. New York had a huge one, I think it was last month or maybe it was January. So we're starting to see these contractions happen. We're starting to see stuff pull back. However, we're also starting to see some of these prices go up, inflation being problematic, that core number still being extremely sticky. At some point, the consumer is the one who decides that data. So I think us meeting that expectations today doesn't really mean anything for the markets. We're just rallying kind of because it's the end of the month, and we know that we have a few more days before a lot of the liquidity concerns in the banking system start to be problematic. So I'm not concerned with the inflation data so much as I will in the future. I think the interesting stuff that we are probably going to be taking a look at are the housing. Look, rates are too high. People can't offload. Also shows you that people want to offload, but probably why? Because they need cash, right? And that's the other thing too. And then you don't want to be paying a mortgage on something that's, what was the housing mortgage that it just shot up to? I think it came back down and then it went north of 7% again.
Yeah.
Yeah. So it cooled off for a little bit and then it just kicked back up. And it's like, okay, well, people are starting to lose their jobs now. They probably can't afford to keep their home. They're going to try and offload it. But at the same time, credit is being extremely constricted here in the banking system. Some people don't have the greatest credit and they're trying to buy a house. Guess what? You're not going to get that loan. And then, people are going to pretty much just be chasing each other down for the next bidder, and it's going to bring the prices down to the housing market. So housing is in no different shape than maybe even commercial real estate. It's just that people are going to be fighting to get any type of bids on their homes, and it's only going to get worse as unemployment continues to pick up, right? So that's the other thing that's really interesting for me. These are cracks in the system that we saw in 2008. Question is, when's it going to go? Because the equity market is diverging huge in huge part away from a lot of these statistics of like the housing market, the bond market, and a lot of these other things going on right now.
Yeah, I'm taking a look at what is going on with the Fed funds rate probabilities. We have 3 weeks until the next meeting, all but guaranteed that there is no movement in rates there. Now I'm hearing that June is where people are still beginning to think that we're going to see rate cuts, and that today's inflation data kind of began to solidify that. Still seeing a 77% chance of a rate skip in May, but when we get to June, that number has definitely decreased down to 37%. So that's what the market has priced in with this latest round of data. That can definitely change as we get more in the coming weeks. Go ahead and talk about the unemployment insurance data that you've pulled up.
Yeah, absolutely. So this is just initial jobless claims and continuing claims that we get week over week. And I just wanted to pull this up because, for seasonally adjusted, we're at 215,000. We're up about 13,000 from the week prior. So it shows you that people are going on to unemployment and it's increasing. It's a little bit different here because the non-seasonally adjusted actually went down about 5,000 or so, a little bit over 5,000. So that's really interesting to see there. I want to see how this plays out next week because this could be just an anomaly from one week to the next. But this is the one that's kind of interesting for me. Seasonally adjusted unemployment. So this is continuing claims. We can see that it increased 45,000. That's a big move. And we can see down here for non-seasonally adjusted, it also increased 6,000. So the seasonally adjusted, non-seasonally adjusted job numbers are kind of confusing here, again, because we are outside of that holiday window. So I'm interested to see how this plays going into March. Over next week, we should have this, and we'll take a look at that then. But there's really interesting things that are going on here, right? Well, initial claims going up, that's not necessarily a good sign. That shows you that layoffs are happening, right? And I think it's more so right now in the private economy, the private sector, as opposed to the public. The public, for some reason, the government's still able to create new jobs. That doesn't really impact consumer spending other than people having, capital to spend in the economy. So it's not as big as the private economy losing these jobs. The interesting thing, though, as we go down, is the states. These aren't the seasonally adjusted, but these are the states numbers and changes for continuing claims and also initial claims. I got to go to California because California is leading the fucking pack on this one. For the advance, it's 41,000. Prior week was 40,000. It's 796 change for initial claims. However, for continuing claims, it was 431 this week. Last week it was 412,000. Almost a little over 19,000 jobs that are continuing to be or increase for continuing claims. So people are still on unemployment. That's a big number. You can look across the rest of the United States. Obviously, there's some different numbers and stuff like that, but that's the only one that's 5 digits on the continuing claims there. And it makes sense. Obviously, California is one of the biggest states, has one of the biggest populations. But is this not a sign that we're going to see some of these major metropolises, these big cities, continue to have people that go on the unemployment line? I think that it's probably a sign that we are going to start seeing that, right? And if we start seeing some of these big cities start to lose jobs, well, then we're probably going to see a lot of these companies that are within these big cities, probably start to tank a little bit, see that the outlook isn't as great. Because again, as these layoffs and these continuing claims happen, people run out of money, not able to push money into things such as, say, instead of going to Target, they go to Walmart, or they start cutting back to the point where they're not, funneling money into the system. These companies don't make as much in terms of profits. Their outlooks have to go down, and then that's just going to be, all the power for these companies to lay off more people, which only exacerbates the problem until finally we do find the bottom in this unemployment death spiral scenario. So it's really interesting to see that picking up. And again, no one's really talking about California, but that and also continuing claims seeming to stay elevated here shows you that there's not new jobs being created, or there's not as easily jobs that are being found for a lot of these people that are on unemployment. So that's going to be interesting to watch too.
Let's kind of take a look at the markets and how they reacted to the data this morning. We see TradFi up for the most part across the board. The VIX down at 13.36. The dollar remaining pretty steady at 104.13. Tech rebounding a bit from the previous days as we expect, rates, a little clearer picture on the rate situation. What are you looking at here in some of the different, in the tech stocks? Or we'll get into crypto after this, but What from today's news is really driving your attention? We talked about Beyond Meat yesterday. That was a fun conversation. But what's catching your eye today, especially in the month? We obviously you want to look at some of the monthly charts to see how things are closing and what direction they're heading into come March.
Definitely, yeah. So obviously this is just the S&P. I'm just showing these on the daily. I just wanted to show this before we get into the monthly. You can see how far apart we are from the 50 moving average. Obviously, this is giving people all the incentive in the world to be extremely bullish. And again, it's daily stochastic RSI. Let's not worry about that. We're going to look at the monthly in a bit. But we can see for the most part that, from time to time, that 50 gets tested quite often, right? Even in a bullish environment in May of 2021, keeps going up. But we come back and we test this 50 quite often. Look at this. It rides the 50 moving average the entire time. It doesn't test the 200 as often, but, at least touches the 50. But we have not touched the 50 since, we didn't even bounce off of it. We went right through it in November of 2023. So this has been arguably 4 months or so of us just going above the 50 moving average without one retest to it. That's a very dangerous scenario. I think that's something that not a lot of people are watching, but it also shows you that there's not a ton of support necessarily below us. And we can say that there's support below us, in the 48, 49, just because that's where the price traded for 1 or 2 days. But this is a pretty big sign that we are a bit inflated. I know I saw, what was it, Savita, I forget her name, from Bank of America. We all know her. She's pretty much the Jim Cramer of Bank of America. She came out and said that, valuations don't matter, even though the stock market is pretty much 95% overvalued. I think that's what someone on CNBC said. And these people are just saying, that doesn't necessarily matter. The technicals don't matter. Well, I think they matter a little bit. It's just that the macros kind of setting up some of these plays for these big institutions and investors to kind of rally this up a little bit. If you look at the NASDAQ, the NASDAQ hasn't touched a 50 EMA. It did the same thing here in May of 2023, and then eventually we did come down a little bit, but it hasn't touched it since October. And then if we look back in 2021, we kind of kiss this thing every few days. We were pretty much touching that. So that's something that's kind of concerning me. The Dow is very similar. Dow hasn't touched it since November. And we can see back in January 2021, we were riding that thing up all the way. So there is something definitely scary about that. That's one thing that we're going to keep an eye on. Looking at what's driving the market up today in terms of the monthly. Let's pull this up on the monthly stochastic RSI. You can see that we're extremely overbought on a lot of these indexes, right? On the monthly, we haven't touched this since October of 2022, right? In the 50 moving average. But you can see that on the stochastic RSI, we're at 99 and 87. I am sure that tomorrow when we open, it'll be 100 and, probably some number close to 100 for the blue line on the stochastic RSI meter. We're at all-time highs right now. We crashed through 5,000. We're at 50, not 50,000, but 5,085 right now. Look at the NASDAQ, same thing. We're at 193. And then we also look at the Dow, and Dow is at 187.5. But all of these are green on the month, right? These all had great months. 5% for the NASDAQ, 5% for the S&P, and 2% for the Dow. Interesting there. And then the Russell too. Russell's at 100 right now and 70. It's green month. It's up 5%. These are all going to be extremely overbought. Last time they were kind of this overbought was April of 2021. And that's for the Russell. But, for some of these other ones, August of 2021, November, right around there, right before we saw the big crash into, what led to the lows of October of 2022. But I think we're getting a little bit too elevated here. The monthly stochastic RSI is telling us that we are pretty close to overbought. Can we continue to push up into March? Probably. I think that we're going to see the liquidity be problematic when the banks pull the leverage from the system. And that's kind of what I wanted to talk about right here with, why S&P is doing pretty good today and so is NASDAQ, but the Dow isn't. Well, let's take a look at NVIDIA. NVIDIA is still up today. On the monthly, the thing's up 28%, 29% almost. But today it's up 2%. And that's just enough to push it, the S&P up, 16 points, push the Dow up, 120 points here. Because if we look across here, Apple's down, Tesla's down. Some of these other ones are doing okay. Like Meta's having a pretty decent day. It's up, 1.17%. I'll take that as opposed to Google's 0.67 or Microsoft's, half a percentage point there. But for the most part, it seems like a lot of this is coming from NVIDIA still. And I say that's problematic because we're going into a period of where there's going to be a lot of leverage that was once in the system that probably won't be there. And again, NVIDIA, very similar to what's going on in the indexes, hasn't touched the 50 moving average. Very different story from what we're seeing with like Tesla or what we're seeing with Apple, right? All these are kind of, what's the other one that wasn't doing too well? Google. Yeah, Google, like all these tested the 50 moving average. A few of these haven't. Amazon is one. Meta is definitely one. And then was it Microsoft? Yeah, Microsoft. See, the four that haven't touched the 50 moving average are the ones that are correlated with the top two, S&P and NASDAQ. And that's kind of the reason why we haven't seen any pullback to the 50 moving average, I think, as well. I think that correlation kind of pairs well with that. But again, when, say, those four stocks start to tumble, then it's probably when we're going to start to see some of these other indexes fall. So it's really interesting looking at this across the board. TradFi's in a really I think the precipice of retesting the 50 moving average at the very least. It's just a matter of time and when that's going to happen. We do need to see a bit of a sell-off. I do want to pull up Snow, though. Snowflake. Their CEO announced that they were resigning. And this was yesterday, this earning. This is one of the fastest growing companies, and we see that it just dropped significantly. It went all the way down to about 20-something percent. Right now, it's down about 17.81%, but it went all the way down to that 200 moving average. And it kind of shows you that these moving averages will be tested, and they are going to be our test of, is this going to hold or is it not going to hold? At 200 held, that 50 didn't, unless Nancy Pelosi is going to buy, $1,000 worth of calls on this thing. I'd be interested to see if this thing does hold and trade sideways here. But the other thing with Snowflake was that I believe there was not insider trading, but there was insiders who were offloading, people who work for the company. They were offloading tons of stock prior to it. If they did a pretty good job because this 20% drop saved them a pretty good chunk of money. I think that's kind of the situation that we're in right now. We're starting to see a lot of these insiders sell off some of their own stock to take profit. We're not necessarily seeing the hedge funds or retail doing that right now, but I do think that the hedge funds are going to be the ones that lead the pack down, and then we'll probably see retail follow after. Again, hedge funds are going to follow the price no matter what, up or down, and retail is probably the one that are going to be last to know, last to move. So seeing this in the monthly close, I think that we are pretty much in a good place to say that this market is kind of just having its blow off top.
Sorry, my bad. I just got a message. I saw a thing about I'm gonna be getting my money back from Gemini. So that is That is exciting right there.
Good news.
100% of it back too, which is quite
You know,
shocking in my opinion.
we should thank Tether for that. We should thank
God bless.
Tether and Barry Silbert for all the, they helped us out, I guess, for once.
Yeah, so if you had money tied up in Gemini, we'll be receiving, once it's approved by bankruptcy court, I'll get 97% back in the next 2 months and the remainder of it in the next 12, which is incredible. Now, I had that like in ApeCoin, and the value of ApeCoin has gone down like 60% from when I had it locked up there. But you know what? I had basically written that money off of my head as never seeing it again. So, that will be a taxable loss for this year. So I'll be able to, I'll sell that shit, write that off against my NVIDIA earnings. Boom, there we go. So sorry, just getting caught up on something that I was seeing there. Let's talk about Bitcoin for a second here. There was some more news today around additional ETFs through Bank of America and Wells Fargo that are going to be, opening ETFs up to customers. So there's a little bit of excitement there. We've seen stupid volatility. It was up to 64 again. And I want to zoom out on the monthly on this as well, because we are in a very similar pattern to 2021. This is our 6th consecutive green month on Bitcoin. It is leading up to, this could be the potential highest monthly close in the history of Bitcoin. Like, we had some wicks up there previously, but if it closes above, let me see here, around 61, if it closes at like 61.4 or higher, it is going to be the highest monthly close in the history of Bitcoin. Now, are we going to see a similar situation to 2021 where, we see this pullback and eventually double tops again? I wouldn't be too surprised by that. Like, the timeline adds up well with the halving, with potential rate cuts. So, maybe we do see a little bit of a haircut here on Bitcoin. Eventually we get back into the mid 30s. I know, Kev, you think we're going lower. You think we're going to like $7,000 for Bitcoin. You and Crypto Capo are going to die on that hill together. But I'm not going to tell anyone to take profit right now, because I'm not taking profit, and I don't know what the fuck else is going to happen next. But and here we go, dry our fucking waves, wave after wave after wave. Go ahead.
Yeah, I mean, I'm just looking at this in the monthly, and this is my favorite chart because, again, we can kind of see the structures play out. This obviously rallied a lot harder than I think a lot of people anticipated. Definitely harder than I anticipated. I think a lot of that has to come with what happened with Tether printing, Binance shenanigans. What's not also not forget how much the ETF has definitely got excitement over Bitcoin as of recent, right? In the past month or so, the ETF has definitely helped Bitcoin get to the price that it is. November also, that ETF mania definitely got it up there. But I do think that there is a lot of manipulation that brought the price up here. I think people who got burned back in November of 2021, pretty good chance to get out of the market right now, especially if you bought some more all the way at the bottom, right? If you bought some of the FTX lows, it's a good chance that you made a lot of profit. You're also pretty much, your cost basis is kind of evened out there. Going to be a tsunami of waves, tsunamis just start.
Chris with a great metaphor.
Yeah, it's spot on, right? But looking at the monthly here, a lot of people are saying we're going for all-time highs. Will we? That's the question, right? If we do, okay. If we go to all-time highs and we say we double top,
it's going to be another wick again, and no one is really going to have the chance to sell it. So it's like,
right, the order's already there.
It'll be cool for an hour or two on Twitter, and then it'll probably just come right back down.
The order's already there. You're not going to be able to get out. They already got their Bitcoin on Coinbase, on these exchanges. They're ready to sell. As soon as the price gets up there, it'll get rejected, most likely pretty violently. And then people will try and buy into that, and then they'll just sell on them again. That's what I'm seeing right here. But with the elite wave theory, I'm just looking at this on the macro. This is definitely a 5-way move up here to when we got to the all-time highs. This is a bigger ABC corrective pattern than I would have hoped for. I was kind of hoping that we'd stop around 50,000 and then we'd go lower. If it holds to the point where we're just going to get a double top here of our all-time highs, then we're probably going to get a double bottom to the point of like FTX. So that's one way to look at that, right? If we stay below this, I think that we have still the opportunity to go to that $10,000 Bitcoin level. Just as long as this B wave stays lower than the origin of the A wave. So that's going to be something to watch. Now, if it goes higher than the all-time high, then we're not going to get new lows. We're going to see something like this. It'll be a regular correction, and we'll probably stay somewhere above, 20 to 25,000. That might be our bottom, right? It really depends, but at the same time, it also depends on what happens in the world, because we have not seen something disrupt the structure hard enough, such as a global financial crisis. And I know I'm resident bear on this channel. That's what I see happening. I think we are going to be in a global financial crisis. I'm not the only crazy guy that's saying that now, too. I'll pull up an article in a little bit. Let's take a
You're
look at
one
the
of the
horse.
many crazy guys saying it, Kev. We know.
Am I? I think I'm the crazy guy that's saying it.
Crazy guy.
Crazy guy screaming at mice with my shirt off. The end is nigh. Probably. But for anyone who got that Family Guy reference, you're a smarter man than I. But yeah, this is what I'm seeing with Bitcoin. Obviously we're at 62,000. We went all the way to 64,000. It got rejected right there. The doors were closed on all the exchanges that you couldn't buy, you couldn't sell, but someone clearly was selling at that point. I'm gonna tell you guys something. Retail that was excited to buy wasn't selling when they couldn't sell on Coinbase. That's all I will say. So that's where we're kind of sitting with crypto. We have to kind of wait and see what happens. It kind of sucks to say wait and see, but at the same time, we look at the monthly stochastic RSI on Bitcoin, and we look at that compared to what's happened in the past. We're at 100 and 100. And this is going to be how many months straight? 1, 2, 3, 4, 5 months straight of green. We're up 46% this month. Kind of the same acceleration pattern, like you said, that we saw in 2021. Can I remind everyone what happened right after that in 2021? Bitcoin hits roughly around 65,000, and it came all the way down to.
Great idea for some merch, by the way, from Chris. Kevin's Crazies.
Kevin's Crazy. It sounds like a candy bar or something. 55%. This dropped, right? So let's say what 55% here looks like. I'm not saying it's going to drop 55%, guys, but I'm saying that what would that look like given where we are? Well, that put us right. Oddly enough, right at the 50 moving average, which would put us right around 28,590. So is it possible? Sure. I think the only way we'd have to get worse than that is if we didn't go higher than that origin of the A wave. And then obviously something in the financial system absolutely breaks and people start getting laid off, and that Bitcoin money, that sweet Bitcoin money at 62,000. Oh, now it's at 58,000. Now it's at 48,000. Well, might have to pay some bills. So let me sell some of mine, and just keeps going down and down. And that's how we end up getting new lows, right? That's kind of the thought process there. Looking at with Elliott wave lines and ABC theory on it. It's the only way I survive in this market. But I just want to look at some other coins real quick. Solana's having a great day. Solana's up 10%. Do I think Solana is a good coin? I'm not saying anything bad about it, but I'm also saying
Did you see the report that SBF is shilling it to the guards in prison? I don't know
clearly,
if that's true or not, but it's a really funny report.
They should have been buying. Look, it's up 10% today.
Dude, he's going to be in some trouble in the joint when he shills that to them and then it dumps. He's going to be getting his ass kicked on the daily, even more so than he already is.
Well, let's look at Doge right now. That's another one that's doing stupid today. Look at that. Oh, what the hell's that? Did you see that?
That was really funny.
That dog just started dancing. I never looked at the chart today. That's hilarious.
It didn't do it on mine. No, I clicked over to it on mine. It didn't dance. What the fuck?
I did the Coinbase one. They probably set that up while the outage happened. But yeah, I mean, we're talking about Dogecoin being back. Last time Dogecoin was back was October 2022.
Market cap on Doge is so dumb.
What is it, like 17 billion or something like that?
Yeah, like what? I think more. I think it might be more.
18 now. Yeah,
it makes sense.
But here's the thing with Doge too.
When strong buy. If you scroll down to the technicals on TradingView, it lists Doge as a strong buy after the God candle it had.
Buy. The funny thing is too, every time Doge has a mega pump, it dumps right after. It's a liquidity dump that we see, right? October 2022, FTX. Whew. I mean, leading into FTX is shit shot straight up. Someone fucking knew. I'm not saying anything yet. We have to wait and see what happens on this one, but it's kind of where we are in the market. We're starting to see some of the shitty things pump. Beyond Meat, Doge, Solana, all these ones that are kind of questionable are starting to pump. I do want to show two things real quick, and we can finish the show on this. The banks are the problem. I will say that every fucking time. Tech is not the problem. Banks are the problem. Tech's biggest problem are the banks right now, because that leverage will not be there forever. I just wanted to show this. 83 counterparties take $502 billion of the Fed reverse repo. That's $67 billion dumped from one night into the other, into the next. So we're very close to that 500 billion being under it again. We were just under it a few days ago at 493 billion. We're getting closer, guys. We're getting closer for this thing to be draining. Bank Term Funding Program, 6 trading days left before that thing goes bust. And the last thing I did want to show here is this article that someone, I will think they are smart for writing it. Jerome Powell is inviting a banking crisis. The only difference is I wouldn't say inviting. I think that I would say that by design, it is kind of structured to be a banking crisis, right? But the interesting thing that they're talking about is commercial real estate, talking about how it's very problematic, how it's estimated that more than $900 billion in commercial property loans are fall due. I think that's just this year itself. The interesting thing, too, is they mentioned China, compounding the economic woes at home is the change for worse economic outlook for China. We talked about Country Garden yesterday, the world's second largest economy. Now, if they have a problem, it's definitely going to bleed over here. We're seeing that deflation is what they're experiencing. Deflation will be exported. That's why I say that inflation is not the problem right now in the United States. We're seeing economic problems elsewhere that obviously will bleed over here. Powell Fed seems to be ignoring the fact that China's deteriorating economic outlook is occurring at the same time that major countries like Germany, Japan, the United Kingdom have all succumbed to a recession. This is bound to add to the deflationary pressures that will come in the wave of domestic banking crisis. Obviously, we're going to have a domestic banking crisis. However, it is also a globally synchronized banking crisis we will see. But this is the interesting thing here. We're seeing all of this come out kind of before the Bank Term Funding Program kind of ends. And in the past, we have seen rates be cut and then the market deteriorates as the economy gets weaker. The economy is getting weaker. We're seeing the numbers. We're seeing the data prove that. We're seeing that the banks are in a really bad place right now, and the perceived risk is only increasing. It is not decreasing, and we're at all-time highs. If there is any type of scenario where this has happened before, it's happened in 2020, and it happened in 1929. Euphoria is maxed. And, we have 15 years of great times. I think that the bubble will be bursting. I'm not saying it's going to burst next month. The Bank Term Funding Program is going to get worse, but we know that there's about $80 billion of those loans that are due very soon. Is there a tracker for the Bank Term at inception when they come due? I think it's on a case-by-case basis from each bank, but I do know that there's $80 billion due in the first few weeks of March. So it's going to get interesting, and that just makes it harder for people to borrow that leverage. No one has that leverage to put into the system. You're not going to see these elevated prices in the equity markets. That's all I will say.
All right. I think that is how we're going to wrap it up for today's show. Good way to close out the month. It was another wild one in the markets. Not expecting that to change anytime soon. Thank you for joining us today, everybody. If you have not yet, do us a favor, like, subscribe, comment. Chris, I saw you sharing us out on Twitter or X, whatever the fuck we call it. I appreciated that yesterday. Thanks, everyone, for watching. Stay safe out there, and we'll see you next time.
Take care, everyone.